In our last video together, we discussed the idea that semiconductors were oversold, driven in part by huge Wall Street dark pool liquidity trades and, of course, options volume. Now we need to discuss what Jerome Powell and the Federal Reserve just said about the market, though, because rates look like they may be cut in September, and this has profound implications for us as traders and investors in the market. So what happens next? Well, we'll take a look at what Goldman Sachs and Bank of America think, along with our own indicators on the S&P 500, NASDAQ breaking out, the NVDA surge and thrust, and of course, the opportunities in the rest of the market. Let's discuss stocks, commodities, and cryptos together, guys. This will be a great one. It's not to be missed. See you soon. Well, welcome back, everybody, to The Daily Show, where we talk about markets around the world. My name's Tom. Today, we'll go through the macro, the data, the lead indicators, and everything we need to know about markets. But it was a day of risk on across the board, and semiconductors and big tech were doing very well. If you weren't familiar with why that might have been happening, it's your first time to the show, make sure to subscribe and smash that bell icon, as every day we break down what sneaky Wall Street is up to and how we can potentially find their traps a little bit better. And boy, oh boy, with the last two sessions, a massive trap, especially on the NASDAQ that we'll look at later on. Now, let's discuss the first topic. Of course, we know the FOMC press conference and meeting minutes were there. And basically, Mike Siccardi over here shared a report from Goldman Sachs that shows you that most people are now basically expecting a September rate cut. Now, in general, the FOMC meeting's message in July was largely in line with expectations, and Powell confirmed that the FOMC has moved closer to a cut than basically we will not have a cut in September. So he's really just saying, you know what, we're going to get one, and that was pretty evident in the wording. A couple of things in the statement changed. We went from being elevated to somewhat elevated when it comes to inflation. And we also seem to add this thing to both sides of its dual mandate. So basically, there were a couple of different things that were added. The dual mandate is back, and it is likely that we are now seeing a September rate cut. And this had profound implications across the yield curves, as you can see here. The 2-year, 5-year, 10-year, 20, and 30-year all moving down across the board, pretty much in line, which was good, especially if you don't want to see an uninversion of the yield curve yet. And we haven't actually seen that. So now the game is on. If we do end up getting a rate cut in September, this is when you need to be actually most focused on the market. And 2025 is going to be a wild year because I believe we are going to uninvert the yield curve in 2025 and everyone will need to be paying attention. This is late cycle investing, guys, the last 1 to 2 years of this massive run. And we will be having to pay a lot of attention to the portfolios that you have and, of course, the trades. Now, we discussed this in the last video, which was, of course, Goldman Sachs max fear reading. We already started to see a huge shift from everyone being bullish to everyone being bearish in sentiment reports. And it kind of led into us thinking, well, it's probably oversold based on that dark pool liquidity. We've got some big, massive trades coming through later on today as well on the show, and just the general technical analysis levels we were hitting. In terms of overall equity sentiment, it actually ticked up in July. And you'll notice here that we're not at an extremely bearish zone, so an overbought zone, or a super bull zone either. So we're basically neutral from the overall longer term aspects of this market. Another reason why possibly NVDA might have been one of the best trades of the last 24 hours was this chart here. And this basically shows you the 1 year, 25-day implied volatility put minus call level. And you may notice something very interesting here. We actually hit the same level in terms of oversoldness on NVIDIA that we hit back in October of last year. And that actually marked a significant low for the stock. And we know the rest is history. It went absolutely ballistic. And then, of course, it went the other way, leading into so many calls in the market that it had to sell off. And this basically happened twice. Now we've just come off this high, which signals pretty much that probably around that level between 95 and maybe 105 was most likely the low for NVIDIA, at least for now. So what happens for the rest of this week? Well, I shared this one after we made the video in the previous day, and basically it was that stocks, bonds tend to rally around Fed meetings. And we found that when we looked at the last 6 readings here, according to this Bloomberg stat, we always had an S&P 500 positive reading. Now, if you didn't get this, make sure to follow us on X, links in the description and comment down below so you can follow us across there, because you do need this type of information. It can help you, along with the technical analysis, to make better decisions. I also thought it was interesting to see here some changes going on underneath the hood. In particularly, it looks like some of the biggest traders around the world are starting to add to utilities. And you would know if you've been following the channel for a while, I'm a big fan of utilities over the next 1 to 1.5 years. Now, this tends to be a bit of a sleeper sector. Yes, it's not exciting like big tech. Yes, it's a bit boring. But from a Sharpe ratio, it does present some amazing potential gains when you're thinking about the risk to reward from that potential market. And if you are a believer that we are late cycle, we are in the last kind of stages of this market run, which we'll show you a chart on later on, then utilities can do okay during those periods. Do we expect more volatility in the future then? Is this the low? That's the question I've been asked several times over the last 24 hours. Well, we know that VIX future term structure has been pricing in volatility all the way to November of this year. Why? Well, it's an election year. We also know we expected volatility to come through earlier, which it has, and August can be a bit of a bullish month. So the idea and the question we asked most of you yesterday was whether we would get a double dip. Now, everyone had a pretty similar response, which was that you thought a September-October double dip was possible within August month. So thank you very much for posting those comments in the description down below. But I think one of the reasons you guys were saying that was this chart here. We don't tend to ever see a VIX. We've actually never seen a VIX overall high form in July. We usually see the VIX highs, particularly in August, September, October. So what's possible is we could actually rally through the start of August, maybe rally into September or even the back of August, start to have some problems, and then go into that second volatility period. Remember, we do usually expect the VIX over 20, but this time around what happened was the NASDAQ sold off into correction phase. The S&P 500 was rotating because, of course, we saw the top 10 stocks start to drop and the rest of the stocks start to play catch up, which is not such a bad thing for the market, by the way, and therefore it wasn't able to fall as low as some people would have expected. What about earnings season? A lot of people are saying, well, everything's bad, everything's looking terrible. Well, actually, earnings is pretty good. You can see by this chart here, the earnings per share is beating. In general, we are seeing a beat rate that is very, very good. It's sitting consistently well over the 70 margin, and generally big tech is in line, if not doing better. And remember, as long as they're meeting expectations, we're getting these big guys, Goldman Sachs, Bank of America, JP Morgan, recommending it to their clients as well. You'll notice here Microsoft, one of my 3 pillar stocks, Microsoft, NVDA, Google, actually had a pretty decent return. And yeah, it was down during the session, and of course it ended up, doing okay. It was down still by the end. We see here that Goldman Sachs are still reiterating that they believe it is an exceptionally good stock, and they have got a buy rating on it to $515. This chart here from Seth Golden. Thank you very much for the share. Let's have a look now at the last 2 reports. ARM, first up, down about 10% after hours. Now, this is an IPO that's fairly recent in the markets, and it's been doing amazingly well. Did it have a pretty good earnings season? Yeah, arguably across the board, it did okay. Of course, the market expected a little bit more from it, or it's just given itself an excuse to sell off. It was down 10%, but that's what you have to expect in a stock like this. Meanwhile, Meta, that had a very good return, and Q2 revenue was up 22% year on year in the report, with $14.8 billion in operating income. So, a lot of people always argue, oh, high interest rates are going to hurt these big tech stocks. These guys have so much money, especially money that's free, that they don't care about high interest rates. That's why the big 7 or big 6 basically have been doing so well. AI focus still, Meta AI on track to be the most used AI assistant by the end of 2024. And of course, it was AI across the board. AI will transform advertising, messaging, content creation, blah, blah, blah. In general, the market picked up, and that's really what we need to look at. Pause the video if you want to check out the other notes there. Percentage of the S&P 500 members outperforming the S&P 500 over the last month. Look at this thing. It seems like we're back in the 2000s. Absolutely went ballistic with rotation. We saw that thanks to the Russell 2000. We kind of expected it. And at one point there, the Russell 2000 was outperforming the NASDAQ for the year. So do we continue to believe that this is even possible for us as traders and investors? We'll take a look here at a great chart from Ryan Detrick over on X, and it actually plots all of the times that the incumbent decides not to run for president again and what happens next. Now, there is one bad one, of course, over here. You can see that was quite negative across the board. But in general, markets tend to have some fairly decent periods of time. So we usually see more of an uptick into the end of the year than not. We're tracking a little bit more like this one right now in terms of maybe we're going into an August that could be wild. And you'll notice that things actually tend to pick up, especially around that October, November period. So if we do continue to see volatility and increased weakness and strength and all sorts of things jumping up and down across the board from August, September to October, we have to believe that in most of these opportunities, the markets will be going up as we approach out of October, November into December. So that's something to keep an eye on. When we think about election years as well, August does tend to be a pretty decent month. September and October usually bad. And then, of course, we get that run that we were just talking about, November and December. A very historic run tends to happen around that time, which should be paid attention to. So we've been talking about the data a little bit. We knew that this market sell-off was fast and it was swift, and it was giving us a couple of different reads. Now, those reads all kind of suggested that we would find a base very soon, that we would rally, and then we would have some problems 2 months later, which, remember, in this case, because these are July reads, middle of July to late July reads, would push us into September to October weakness. Now, that seems to make sense on the markets right now. Kind of looks like we're going to get that August rally up. Then maybe we'll see a little bit of weakness after that. What about the Russell 2000? Well, the Russell 2000 has started to play catch up to the average. We've discussed that a lot of the Russell gains tend to happen in the last 1/3 of the overall run. So you'll notice here that pretty much in all cases, the Russell was going to do better, and it looks like it's getting ready for a pretty big coil out. Now, if you thought the earnings and vol was over this week, it certainly isn't. We had big positions coming through. We've got Apple, Amazon, and Intel on Thursday after the close. We also have non-farm payrolls Friday before the market open. Remember, that is 8:30 a.m. New York time that we're going to see that huge number come through. Will we start to see weakness in the labor market? Some people are believing so. In fact, I'll put that in our next video before we end up seeing these results, because I tell you what, there is an amazingly wild statistic that is going to come out, and we're going to have to talk about it. Then we've got ExxonMobil and Chevron, so some big energy stocks coming on Friday. And do remember, the expected moves are huge from the options market. Meta was expected to move pretty big. It has been. ARM expected to move plus 12, minus 12. And that has moved, I think, negative 10 after hours. So the options market's not stupid, guys. It does tend to price in. So remember, Apple is plus minus 5, Amazon 7 to 8, and Intel possibly up to 9% moves. Now, I don't really like usually trading into those events. I find it a little bit more gambly. I think we've talked about that before. But as you would have noticed, once we saw that AMD result and Microsoft result, it was a smash straight into semiconductors, NVDA, and the thing just went ballistic and started rallying straight away in the post-market. And that's kind of what you see. You get the result, then you expect it to be a very key level, and then it starts to flow through. And it was, pretty much ordained by these large dark pool activities. Speaking of dark pool, it looks like someone went big into the TQQQ over the open on the previous session, and this happened right at that point where you would expect the bulls to start taking control. Basically, they then push into this level up here, which is where we have a gap fill, and you'll see later as we analyze this, this is pretty much where we expected the market to get to. Now, there is also a very large trade over here, which most likely was leading into the sell itself. So this market is currently bullish, filling into a bear zone. And if the bears aren't able to actually hold that area, then maybe we have seen the lowest point. And we'll talk about that soon. From a 6-month base perspective, though, Whaley, Brett Thrust, 100% read of the time, exceptional returns, 6 months all the way up to almost a year. These are all the reads. It is a very good indicator. I'll keep putting those in the videos so that you guys know where we're at and what we kind of expect. And remember, the Whaley thrust overall does lead into our expectations that this market is still bullish. The dips need to be looked at as opportunities for now, unless we're proven otherwise, because this was the most bullish bear sell-off that we've had in quite a long time. The rotation was significant. These are some of the key things we'll be needing to look out for the rest of the week. And do remember, it's the non-farm payrolls that really matters from this point, and the earnings from big tech. Let's have a look at rotation. Home builders down just near the end there after having a pretty good rally across the board. Last 5 days, home builders been doing well. Insurance has been doing well. Metals have been coming back. And you'll notice here the defensives were down a little bit in the 5-day, while the rest is starting to play catch up. And semiconductors went from being the worst to up 2.49% over the last 5 sessions at this point. Last 24 hours, 7.63% out of semis, home builders, and small banks and big banks all down in the bottom. Now, of course, if that continues to be a big issue and it goes through the next couple of weeks, then we can talk about it. But at this point, we know that really it's probably money rotating out of those and going into these. Why? Because these have been so strong. The banks have been going absolutely ridiculous. Let's now have a look at the S&P 500. It went up and it got exactly to the level we discussed together. So well done, guys. You expected this, the 55.50. We hit it, we filled that gap in, and we rejected a little bit into the end of the day. But what I want to point out here was the advanced decline line. Look at this thing. It's going to a new high as we have pulled back. Now, that is not a bearish sign. Overall, considering we breached through 5,500, it kind of suggests that if we do get a pullback here, that probably a bull is going to try to take in or get into this type of market. We've still got the gap fill up here that was left. We also have the advanced decline line doing very nicely. Now, I don't usually pay too much attention to the overall, of course, delta volume, but I thought I'd put it on the chart just so we could have a look at it together. And you'll notice here it's positive for the last 2 sessions. And again, it was positive on the negative session here, which we suspected had a buyer in it. And well, it turns out they were there. Let's have a look at the futures market. Again, hitting that perfect level we had in our previous video together. Most traded zone, last major bear area. This is where the bears are going to come in if they're going to press the market. And you'll notice here, we're actually getting up close to the 55.70. And it turns out that 55.85, so anywhere between this zone and this zone here, are pretty much where the main options are, which you'll see in a moment. In terms of pullbacks, some of the things you could be looking for is a pullback back to this resistance and a pullback back to maybe some of these moving averages and stuff. If that happens, you'd have to think the bulls now will want to try to get into this market. But it's actually the NASDAQ that seems to be showing the best overall technical analysis levels. We'll look at that soon. Let's move over to the S&P 500. Well, here we have 55.55, which is pretty much got all the puts on it. We would expect that to be the bear level. And we know that 55.80 to 85 has that positive gamma correlation with it. So we've moved from negative gamma into positive gamma potential here over the next session. And then we have massive puts now sitting at around 5,500 and also the 54.35. So what this kind of means that if we do find struggle around here, which we suspect there could be, if that does happen, then the market, if it does pull back during non-farm payrolls, is going to have a really hard time with 5,500 by the end of the session. This is kind of like what we spoke about in the previous one, where we thought 54.30 was going to hold up, and it just barely did during the previous session with buyers coming in. They showed commitment, dark pool activity, big options volume, and then they sent it skyrocketing up. What about the CTAs? Well, I would suggest, because this is a delayed chart by 1 to 2 trading sessions, that overall this is going to skyrocket back up from CTAs, but it is down from the previous sessions. And of course, we saw that spike into low. It still helped us to kind of realize that someone did buy. So that was a real CTA purchase that came through. And although they gave it up the next session, I'm pretty sure we're all aware that it probably will be going up. Now, Brent had an amazing run last 24 hours. So did copper. I expect CTAs to show and confirm the move, which we'll be looking at later on. Gold, still dropping off, bit worrying, but I again suspect that there were buyers over the last 24 hours, and we'll get an update on that over the next 2 sessions. Let's have a look at Tesla. Tesla was up 232. Island reversal traders will be happy with that. 235 remains the main strike zone. That's where you start turning into a really heavy push on Tesla due to a positive gamma / potential squeeze situation. From NVDA side of things, it really is all about the 121 and 123 kind of area. You can see here there are a lot of calls there. Again, moving into a squeeze style situation that could be their positive gamma situation. Look towards the closures above that point. 122 in particular is exactly where you would expect bears to start pressuring the market down. So again, it's being, really confirmed here by the options market. These are key levels we should be watching. Let's now move over to the lead indicators. The VIX didn't hit 20. That could suggest that we have a second volatility coming on later this year, as many of you do suspect. And for now, it looks like it's kind of calmed down. Home builders did drop a little bit, but overall still in a bullish trend, so that's good for the market. KRE, regional banks, in general banks, still doing well, although they did drop. And our bond indicator here actually fell off. So remember, if this starts to be sick, the markets go to a new high, and then we start to think about the double dip, this will be a very key indicator that we'll continue to track. Let's look at treasuries. They were up, new high almost here, broken. Looks actually quite good on the charts. So treasury starting to price in those rate cuts in the future. And yeah, it's not bad. It looks kind of bullish. Now, I don't trade treasuries. Of course, I do think it is a position-based longer-term buy, but still an interesting level. Copper managed to break through our first turn zone, which suggests that we can now look towards copper maybe getting back to like 435. This is huge relief. We suspected it over the last 24 hours, coming off our green box zone, taking that low, doing everything we expected. So this is a very strong move. And now pullbacks from copper should be met by bull demand, at least from a technical perspective. So copper really turning here, pushing those metals doing better. Dollar index, weakness, weakness, weakness. The thing went through 103.89, closed, sold off further so far. This is the last step, kind of potential buy here for the dollar. I've got close above 104.20 as bullish. That is a first bullish sign to really show this thing actually means business to get back up here or even higher. But if it gets underneath here by the end of the week, 103.50 zone, I think that the dollar is going to continue to weaken, and we may be seeing a significant shift in dollar moves. Gold, great to see it go this way. Bull swing zone. Look, great trade, guys. Got to say that was fantastic. Absolute replication. This particular setup is from our day trading masterclass, and I can tell you that one is a 3-to-1 style ratio at this point, and there could be even way more on it. This one actually could lead into even more if you scale it correctly. So yeah, if you're ever interested in finding out more, jump on over to fxevolution.com or check out the links in the description down below. Let's look at the bull swing zone. This area here is pretty important. We managed to close above the last high, and that's kind of signaling that now if we get pullbacks, and I kind of suspect we will, that those pullbacks should be met by bull demand, and this is a melt up style market. Remember the things that are at stake here. A huge shooting star on gold. Now, yes, we're quite bullish on gold. Yes, I'm a bit crazy about gold over the next year. Hey, I've been talking $3,000 for a little while here now, and look, it's been doing amazingly. It's one of the best asset classes of the year. So I would love to see a strong weekly close on it. Ultimately, it's going to come back to non-farm payrolls, and we'll see what happens. Remember, you have to remain flexible. I'm a bit biased on that one, but of course, we are looking at trades versus investment or position-based buying. They are different things, so you have to remain vigilant on both. Take a look at silver here. Has it closed above a very bullish zone? Not really. It's actually in the bear area at the moment. So if you're looking at silver and you want to short it, this is the area that you would be targeting on the smaller timeframes. If it gets through 29.50, that's a very bullish sign for silver. Let's move over to oil. Oh, this thing rallied, and my goodness, it rallied. It went ballistic off 75. I suspected it would. Again, there was a replicable trade in here, and the trade buy was right there at 76.20 with stop below the low. Not bad. It's up about 1.5 to 1. We're at the resistance zone. I still think 79 will need to be breached to really get oil going on, but it's doing a lot better. Energy stocks, not the greatest session, really. Rallied up during the start, then dropped a little bit. I still think this is all waiting on those Friday earnings. We'll see how it ends up rallying through those, or if it ends up dropping. HSI, Chinese market, did pretty well. CQQQ held up and obviously did well in the last session. And Tencent's the one we're watching still. So Tencent showing some strength, not above 377. Until it's above 377, unlikely to have an excellent trade on it. Still, I think Chinese market is relatively cheap. Let's line in here with the UK 100. It's doing really nicely. And of course, it's rallying up. So looking towards more for the UK 100 as hopefully we see a movement back into commodity space. NVDA, this is huge. Look at this. Absolute monster rally. Considering it was down after hours into the 99s or 100 flat, I think it was like 101. It actually hit the 61.8 fib and went ballistic to the upside. Now, this is a very strong move. The gap fill is at 122, which is where those calls sit. So really, this is the bear area. And I think after hours, it was up another +3. So I kind of expect us to sit at 122, maybe have some problems here, maybe get a weakness into strength ideally. And this might be the low for NVIDIA for now. That is a significant thrust change, and you have to pay attention to those. Now, some people say it's a dead cat bounce. It's possible, but of course we'll reassess. 122 is the first major zone for it. Semiconductors, same thing. Good day, coming off the 61.8. We used all the analysis yesterday to figure out these levels, so well done to you guys. And let's move over to Tesla. So Tesla's trying to get through that 235. If it can, of course, we're looking towards gap fill of another $10, 247-ish, and then we might be even continuing up. It's in the middle of nowhere for me, so unless you like trading island reversals and that's about it. Yeah, if you're doing it so far, you're probably smiley face and feeling pretty good, but yeah, it's going to need usually a little bit more. But overall, it's an island reversal, and the thing is trying to push that 235. US 2K still going higher, but didn't manage to hold above last 24 hours. This is what we call a dull market. Now, I never short dull markets, so you should not short dull markets. It's got a series of higher highs and higher lows, and the thing looks like it's coiling to break out to 243, which we've talked about, and we still think that that is the most likely scenario at this stage. Let's move over to NASDAQ. This was absolute trading beauty. I was in our Market Masters Club, and I can tell you, there's not often I sit there in the mornings when we do the live streams, free 7-day trial, links in the description down below, by the way. And I was just sitting there going, this is just the best day. Like it was so clear. You know, very rarely do you get an incredibly clear zone where you're just like, this thing is going to go ballistic. We do a daily show here. Not every day is a great day to trade the S&P or the NASDAQ or anything like that. Some people would argue, I say it's not. Generally speaking though, when you have edge, you have edge. In the last 24 hours, yeah, you could tell. I was just going ballistic on everything. So many key levels hit. It was absolutely wild. And we ended up, seeing some excellent trades from this point here. Obviously, this was a huge breach, but you can kind of see it was coming. And yeah, did I expect it to go 4% or whatever? Maybe not that much in one session, but we did talk about up here. So I'd like to see this thing hit the bear area, and I think this is one of the best. Now, if it does find weakness, it is signaling now that weakness will be purchased in as buying pressure. And this is a huge drop and a huge movement on the NASDAQ. Some great learning there. And don't worry if you miss these types of things, who cares? There is always another opportunity. Remember, we always talk about abundance mindset here. There is always another one, guys. A few weeks ago, we talked about Intel. We dropped that stock. We didn't care anymore. Why? Because it was just a trade to a level. We've done AMD several times. We've done so many different stocks. You don't have to fall in love with anything. You just need to find the right edge during that time and trade it in a replicable manner. Now let's talk about Bitcoin. A little bit weak here, took this low, still holding the bull swing zone kind of zone. This is important for it, but I'm actually happy with Bitcoin to coil. Now I don't think there's an excellent new trade on this. Of course, we've been super bullish since down here. This is maybe a little worrying for some people, but ultimately there's been two exceptionally good trade levels. We're looking for a new all-time high in the future, and I would like to see Bitcoin consolidate and coil. There's nothing wrong with that. Coil, 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 coil. If we then get a breach, it's going to be ballistic, and that'll be a fantastic trade in the future. Now we move over. We know that the jobs numbers are all that matters, and other than the big tech earnings. So 8:30 a.m. New York time. Make sure to watch. If you enjoyed today's video, guys, make sure to check out some of our other stuff, including follow us over on X. Thank you so much for watching. Thanks for the likes. And we always do a little bit of a summary here. So I guess in summary of what we're thinking about the markets right now, you cannot ignore the Whaley Brett thrust. It is very strong for those people looking at multi-months. It is an incredibly good reason. We also know that we're probably late cycle, so we're going to start seeing all sorts of shenanigans. And this is an election year like no other, so expect volatility as the market tries to figure out who's winning, the policy changes, all those things. These do matter, but ultimately it comes back to the Fed as well. Everyone expects a rate cut now in September. Imagine if that didn't happen. It could be very volatile. It's going to be a great time. Make sure to sub. We'll see you in the next one. Bye for now.